reporting right at the beginning this time instead of like half an hour into it. Okay, so I'm still on, for those of you who have me in class, I'm still on zero sleep, so I'm just not with it. You had asked me to do Costco. I didn't put together a whole report like I did with whatever the other company was, CrowdStrike. So we can just go through it on three-statement model and some of their financials on here. And then Matt had done some report on Costco too. So we'll look at his stuff too. So next week is Dead Week. And I think some of you had said you're okay with meeting during Dead Week. I'm going to have a schedule conflict, probably. So I got to go present the thing at the Butte County Library. So we may or may not. I mean, you all are welcome to come in here and have a meeting, but I don't know if I'm going to be late or not. I'll post on the Discord or something once I figure out the schedule. But that's really it. So, and then we'll plan for fall semester to do the same idea. But I wrote down some notes. I was thinking about the structure for the fall. Oh, you know what? A couple other things. Sorry, I got to do intro stuff here. First, Joseph passed the SIE. Congratulations. And he was in the paper. Put that there for now. I'll take that back. We'll frame it or something. And then Sam had two, but we thought we already knew about Sam. And then I don't know anyone else who's passed, but if anybody else takes the exam and passes, let me know. We'll celebrate you too. Okay, so then my thoughts for the fall is that we have like teams set up for the different sectors so that we don't just have people randomly say, oh, let's pitch this stock or this. Like people can focus on sectors. Because so much of what we've done so far has been tech. So that's fine, except there's a lot of opportunities in other industries and other sectors. So we don't need to always be on tech. So instead, let's have different teams for different sectors or different industries, however you want to look at that. I guess it depends how big of a group we have. Let's stick with sectors until we know we have enough people. And some groups may have to take on two if there's a small sector or something, or like there's just not enough people or something. And then we'll do that. And then we'll have to evaluate. I think I'll set like targets throughout the semester where like by this date, we need to report on one or two or three of the companies in that sector so that we can compare them so we can actually start setting up our portfolio. So I think that's the way it'll be, with a lead in each team and then people who are doing the analysis research part. And then when we all come together, the lead on the team can pitch the ideas that the team got together. So it'll be a lot more work-like rather than like student school-like, you know what I mean? So it's a little more career experience. So that's the idea. So any questions about that? Now let's look at Costco. So first thing is cost US equity, and then I just start with FA, financial analysis. So with Costco's business model, I think we all know Costco's business model, but just in case, they're like a retail store, like a big warehouse type store. They sell a lot of bulk type stuff. So you can buy lots of things for relatively cheap. It's cheaper, but it's hard to buy one of something. You can buy like 45 of something, or you can buy like a big giant container rather than like one, personal size. So they sell big stuff, but they sell based on their costs, right? So they're called Costco because they don't like mark up a lot. They sell really, they sell it relatively cheaply, but you pay a membership to be a member of Costco. So there's different membership levels, I guess. But so if we go look at their segments first. So, you know what? Do you want me to switch the lights real quick so that people... So their revenue comes from their warehouse, which is selling. So warehouse club is them selling all these different types of things, and then membership fees, right? So for 2021, 2% of their income was from, it's like 2% even comes from membership fees, and then the rest of their sales is all these different categories. But the biggest category would be food and sundries, but it's only a little bit bigger than non-food. But then they also have other things too. So that's kind of their breakdown. Their biggest drivers, if we actually pull up at the same time, hold on a sec. Pull this up earlier. So if we look at their 10K, that's a 10Q, 10K. So Costco's 10K for, where's the date? The year ended August 29th. So they have a weird fiscal year that's like in the middle of the year. But this is for 2021, their year, their 2021 year. So if we go look at, actually we can do, yeah, it's usually, I mean, they can't change it very frequently, but they can, yeah, depending on the type of business that they do. Some companies it makes more sense to have a January 1st to December 31st, but other companies it makes sense to do something different. So Mdna, management discussion and analysis, right here. And so they said they believe their most important driver of their profitability is increasing net sales. Well, of course it is, because that's their business, selling things. But also comparable sales. Comparable sales for them, they define it somewhere over here. So they define it as the store, what they sold in the store compared in each like location compared to what they sell the previous year. So they want each individual store location to increase their sales. That's how they manage comparable sales growth. So on here, we can look at comparable. So one of the things that we can look up is Bloomberg Intelligence. And so we can do Costco US. And look up Bloomberg Intelligence. Oh, that didn't work. Let's just do BI first. So Bloomberg Intelligence lets us look at some of the research that they've done before, and then we want to do by like Costco specifically. And then let's start with the company primer because that's just basic description about them, and then we'll go to the analyzer. So for any of the companies you're researching, I recommend starting with the primer because this is analyst. So this is Jennifer, whatever her name is, does some research development on Costco, right? So it says, here's some things to think about. And then these graphs are super helpful. So I'm going to go open the data here. And it opens in like this. Oh, on this one it didn't. On my other computer, it opened in a new window, but that's okay. So let me go back real quick. So this article thing here is April sales are driven by ticket growth and boosted by gas inflation. So Costco sells gas. They have Costco gas stations. And if we go back to financial, can we find fuel on here somewhere? Let's go back here and see where they put fuel in. Food court, gasoline. So warehouse ancillary is gasoline. Let me go back here. We find warehouse ancillary. So that's their gas. So 16% of their 2021 revenue came from not just gas, but everything within warehouse. So if gas prices go up, they're going to increase their revenues. And actually on the SEC Edgar thing, this they published this in October of 2021, but they said on here, let me find it somewhere on here about gas. Gas price, a rise in gas prices benefits our net sales. But they didn't know that gas prices were going to shoot up a whole bunch in 2022, but they said this in 2021, and then they did end up having more profit in this most recent quarter. So on Bloomberg Intelligence here, you can see some, company outlook, what's going on, things that are making them go up. So they actually publish monthly sales. It's kind of interesting. So I'm going to see, I wonder why I can't open this in a new tab. Whatever. Interestingly, Costco publishes their monthly store sales, which seems weird because most companies don't want to publish more frequently than they have to, but these people do. And so you can see this is a 4 different points on here. White is their the Costco sales without fuel. Orange is Costco sales with fuel. Pink is their tickets, which I think is like individual people coming through Costco. I'm not 100% sure. We can go look at the definition in a minute. And then blue is traffic index. So they can see like as traffic increased, so did orange, which is the revenue with fuel. So you can see that Costco did much better when traffic was increased. And so we might want to look at that. So I'm going to go hit description of ticket. That's the description of Costco. That's not really what I wanted. I'm not sure if what they mean by tickets is the number of people that come through, like sales at Costco, or something else. It's mass merchants. Let's see. Doesn't really have a description there. Company name, Costco, US equity, field, not really anything there. So I'm not sure what the ticket number is supposed to represent, but That's okay. So let's go back here and say, okay, so fuel is one driver of theirs. So we think that, and then they have a separate graph just for that. So Bloomberg Intelligence is going to help us kind of get a good understanding of the company, right? So we can say, okay, so just mass merchants, Costco. So Costco is this is white line. Is Costco is one of the mass merchants. So this is Costco's. It's a 10 number. I don't know what the number actually is, like a growth rate. Value. I'm not sure what the number is supposed to represent. Billions in sales? Something like that. And then as fuel spending increases, let's actually traffic amounts increase, then Costco does better. Okay, so these are just some things that we can include here, and we can look at the details here. So Costco's 18% increase in sales, the strong start to the year, blah, 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 blah. Comparable sales rose versus 11 the year prior. Gas price inflation helped them. So these are just things to help us get a better understanding of what's going on here. No sign of slowing down for their sales. They have outlook of different monthly sales and revenues and stuff. So one of the things that we could do is, from the Excel thing, we can find a 3-statement model, which is different than the DCF model we've done before, but X3SM, that's what it's called. So in the 3-statement model, read it, I want to open it. 3-statement model is the same kind of idea as the DCF model, and either one of them is fine, but I'm going to use this one this time so I can like show you that there's other choices. And this one, 3 statements are income statement, balance sheet, cash flow statement. And then we can project. One of the things I like about the 3-statement model over the discounted cash flow model is there's a checkbox for bullish and bearish estimates. And so you can say, well, what if I don't like Costco very much? Or what if I want like a super negative outlook? What does it look like? And you can check the box for that. So I need cost, US. And then we need to sit and wait. And while that's going on, I'll go back to Bloomberg and we'll go keep looking through some of these things. So, I mean, these are just ideas to help us get started. But we want to look at. So what we'll do, I think, next semester is we'll do all the research for Costco and their peers, right? So Costco and we go where here. Their peers are going to be along the bottom. So this is SPLC, which is supply chain, and so Walmart, Target, 5 below. I don't know anything about them. Dollarama. I don't think we have a Dollarama anywhere here in California. Dollar Tree, Dollar General, blah, blah. So these are all sales. So those are their most connected peers. Updating. Good. Okay, so when I put in Costco, I can adjust some of this. You can actually go read the instructions on how to do this. So here's the help. So it's like how to fill out everything. You can fill it out here, but I'll just do it. So there's Costco. I want to know what their financials are. Here's Costco's financials. They have each year. And then they have the most recent set of quarters, and then they have projected for future years, right? So this is the only section right. This is the only section right here that's quarterly. Everything else is yearly. We can go look at their trends. So revenue growth year over year. So they've been doing good. None of these are negative. They haven't decreased revenue at any point. It's pretty cool. And so if they continue to have some revenue growth, I would want to see where does this come from. So this is driven by something. So the drivers. There's an array of drivers that are up here that we may want to look at. One thing we can do, I don't know if Bloomberg wants us to do this, but we can like expand this. So look up here and say, okay, so here's some of their information that they're going to use up here. Can't scroll now. They won't let me scroll. I don't know why. This is probably why Bloomberg didn't want me doing this. Like I'm frozen. So here's some of the drivers that we can have here. So revenue, gross margin, interest rate. These are all some drivers that we might want. I don't know. No, this is just their income statement. Why does it say drivers? I don't know. Scrolling is totally locked. So same thing that we did on the DCF model, where I can open some of these. I might change to, what's the low estimate for the next 5 years for some of these. I could change to a bearish model. I can do a lot of stuff within these. So there we go. So bear case gets set up, and then I can go see. And then go see what does that mean for the future, and then I go look at their valuation. So if they go down right now, Costco's price is like 500 something. So if they went down to 481, these are all the red numbers are if their price went down, and the green numbers is if their price went up. So on my bearish case, it looks like their price might go down, right? So we might lose 15% on them. The thing is, we need to compare it to somebody else. So like we need to look at Walmart and Target because those are the big competitors of Costco, right? Amazon's not so much a Costco competitor because Costco is going to be a lot of like grocery type foods, whereas nobody's going to, I mean, I guess you could buy, there's Amazon Fresh or whatever, but people don't buy as much food on Amazon as they do like other products. So Walmart and Target would be good. And then groceries aren't really a super close comparison. So I think Walmart and Target are going to be the best comparables. One thing to look at here, this is their income statement comparison. So the green is the revenue on the top line, and then the bottom is looking at their expenses. And cost of goods sold is their biggest expense because Costco sells at cost. And so everything they sell has to just be slightly more than what it costs them to make up for their like overhead, basically. And then their income from memberships. I think their overhead, we go back to their FA income statement. If we look at their revenue for 2021, so their total revenue was 195 billion, right? And then their cost of revenue is 170 billion. So there's a spread there of about 25 billion. So they overcharged based on their costs by 25 billion. I mean, not overcharged, but you know what I mean. They got a gross margin on all of their sales by $25 billion. And then what are their operating expenses? What are their other costs? So they need to plan ahead to try to like break even, basically, right? So they charged enough I think it was we go to segments, it was about 3 billion in membership fees for 2021, 3.8 billion in 2021 membership fees. So they got that 3.8 billion plus a little bit over on their sales per item. So so about 25. So if we take that 3.8 off of here, then we're about 21.6 or so, 21.7, somewhere around there, in how much they make per item that they sell. Then they have their operating expenses. They have what do they have here? Operating income. I gotta find that one. Pre-tax. So before taxes, they had an operating income of 7 billion, and then did I skip tax somewhere? Oh, tax. There we go. So income tax expense, $1.6 billion taxes. Jeez Louise. And then their net income being $5 billion. So that's kind of it. That's they target their upcharge on their stuff to try to just continue making money. Their biggest concern is that they don't want to raise prices if they can help it. So some things they sell at a loss, they said on their SEC filings. So from that, we can say, okay, well, we might want to make some other estimates. So what if we said their enterprise multiple? So we might want to look at what is their versus their peers versus them in all these different categories. So free cash flow to the firm. So do we want to value their terminal value based on their enterprise value to sales or enterprise to EBITDA or one of these other topics? So when I did CrowdStrike, I showed their DCF model with their EV to EBITDA because that worked for them. But for Costco, perpetual growth might make more sense because their business model is such that they're not changing. They're not making a million different changes to their business, and they don't have, like with CrowdStrike, it was a big tech firm. So we're wondering, what cool new innovative things is CrowdStrike going to do? Costco, I don't think anybody's wondering what cool new innovative things Costco is going to come out with, right? They're just going to be there. But that makes the model actually way easier. There's a lot less work involved in figuring out if this company is just going to stay there and keep doing what they're doing. Really, all we need is for them to keep selling more stuff. That's it. We just want their sales to go up. And what are some of the drivers of their sales? I don't know if it's listed on here because I kind of broke the Excel file trying to click on too many things. But one of the drivers is going to be like how many stores do they have? And so we can go over here and find additional information for Costco. We can say sales per retail space, total number of spaces. They have 800, actually it says 817. I think they had 815 last time I looked, but I guess 817. They must have opened 2 stores this morning, I guess. I don't know why I said 815 before, but 817 stores, and then where they are, and you can go look and say, one of the things we might question is like how much exposure they have to other countries, but it's very little. These are all the different countries they're in, but the United States is 560 out of their total 817, and then Canada is another. So 670 out of 817 is 80, more than 80% of their businesses in North America, and then Mexico is another 40. So like all of that North America business. So they're not really international a ton, but some things are. So we might want to think about it a little bit. But if we go back and look here, that's another thing to think about is we go to their value segments. Oh, I can't scroll anymore on segments either. So sorry. See if I can. Okay, that kind of didn't work. Hold on a sec. Yeah, there we go. Okay. So if we go look at not this, where did the graph go that I just had? There it is. Okay, so if we, sorry, I've totally lost myself. This is like, I have like 4 hours of sleep total this week. So so if we're looking at these different company or country exposures and we go look at their income statement, they have a thing for foreign exchange gains and losses. That's so small you can't see it on, like that dark blue there is their operating expenses. I hover my mouse over it. It says operating expenses. So it's not for like the foreign exchange is so small you can't even see it. So I wouldn't worry about any of the overseas transaction stuff. Just go by under additional here, how much sales per retail space, gross profit, that kind of stuff. So how much space do they have? Are they looking at adding any more to their, are they buying more stores? The number of stores, we can see how many closed or opened or acquired. So they've, this is for 2017. We don't have any numbers for acquired, even though the number's going up. I don't know why. Oh, that's product brands. Never mind. 25, 25, 16, 22. So we want to see if they add more. So they've been adding like 20 stores a year over and over and over. So they continue adding 20 stores next year. Then they're going to have so many sales per store because they have a certain trend of sales per store, sales per retail space. And we can see that increases. That's about, and we can say averaging around 1,400. So if we add 20 more stores, that's 1,400 times 20 to their revenue. And we could plot that out and see what they're going to be worth, right? That's something that we might do next semester too. I'm going to stop for a second and ask, anybody have any questions, anything that they want me to look more into? Matt, you want to talk about what you found? Okay. Maybe I'm wrong. You tell me.
Oh, yeah, I don't know. You probably know better than
I don't know. I don't know. I'm kind of asleep.
Oh, I got you.
Okay, so we used it. Yeah, no, you all, I say something. Oh, you're lucky. Semester, whoever's in like the retail sector, to look at Walmart, Target, Costco, and do the DCF model. Like it's already pre-built, so we just gotta plug in some thoughts and see, what do we expect? Is one of them better than the other, and why? One of the harder things for us is going to be once we do have a bunch of stoppages under our belt, $500 a share, right? We can't buy more than 25 shares, so we're kind of stuck. Right? I mean, if we bought 25 shares, that would be our entire portfolio. We couldn't buy 100, right? So we gotta say, like, how much are we gonna put? But that's okay with most brokers now. We can do like a fractional shares. We gotta say, we'd rather buy Walmart or Target. Are they gonna grow faster? Or a certain percentage of our portfolio. All right, great.
Yeah, all right. So I took a brief look at the macroeconomics of Costco. So some of the macro risks that I saw was basically it's very highly exposed to the California economy. California makes up about 30% of Costco's US revenue. So if the California economy, takes a shit, then it's not good for Costco.
Wow, I know that. That's good.
Another thing is Costco imports roughly 50% of their goods from China. So that could be, the tariffs on China could potentially play a factor, as well as just foreign exchange rates. I know Jacob said that probably wasn't going to be as big of a factor, but it could play a role in that.
Well, so let me. So when I showed the foreign exchange number on that graph, that's the change in their revenue from foreign exchange costs. So if like a change in dollars to yen or dollars to yuan or dollars to euros causes their exchange rate, or if that exchange rate causes them to lose money on the transaction, they would report that. But if they're buying everything with dollars, being transacted in dollars, they might bring a lot of stuff from overseas, but it won't affect their foreign exchange transactions. They're dealing with everything in dollars.
Okay.
Right. So that was what I meant by that. And if they operate a bunch of stores in other countries and they sell, they don't like if I'm going to a Costco in Mexico, they probably don't want US dollars. They want pesos, right? So that could make a difference for Costco if they're collecting lots of peso sales in Mexico and then they have to ship that, quote unquote, ship that to the United States for their headquarters. They're going to transfer that to dollars, and that might cause them to. If somebody bought the equivalent of $10 worth of food at the Mexico Costco, and then when it gets transferred back to dollars in the United States, they only get $9 because the exchange rate changed.
Yeah.
They now sold that for $9, expecting to have sold it for 10, so they lost $1. That's the idea. Okay. But okay, sorry.
Yeah. So changes in consumer habit could also affect Costco's membership revenue. And I was looking at, so basically Costco charges a membership fee if you want to shop in stores, but if you order stuff online from Costco, you don't need a membership. So my thought was basically if people continue to buy stuff online at a higher rate, then that could potentially affect people's willingness to buy their membership and go in stores. You have a question?
DoorDash from Costco.
Yeah, I don't know if
If you tried
Instacart.
to say Costco, they say no.
Yeah, I don't know if Instacart has Costco on there, but that would be something good to look up for sure. But yeah,
Have someone else say it.
yeah, so that could definitely be a factor in Costco's membership. So next slide. All right, a couple more macro risks. I know Jacob just pulled it up. So Costco spent 2% more on gasoline from 2017 to 2019, but I guess that is actually something technically good for Costco is higher gas prices. And GDP drop is down 1.4% this quarter, and that's I think the first drop we've seen that significant since spring of 2020. So that could be just a bad thing for the U.S. economy as a whole.
Well, Costco spent 2% more on gasoline, but they buy it, sell it, right?
Yeah.
Costco gas station. So it's not an issue for Costco to have spent more on gasoline because they're going to charge people more for it too. So they made a spread on that, and their spread is a little bit higher. I guess they made more profit. The thing that I was looking at this trend is more drivers mean more gas sales. So it's not just that they haven't necessarily increased their spread over what they buy versus what they sell, but they are doing more volume. So that spread that is there is at multiple times up because there's so many more drivers. And with the country back open, driving. And with summer coming up, people will be driving more. So
For Costco, they have a lot of like recent, they have like a lot of like cost leaders. So like if they don't make that much money off the gas, that means people are going to the gas station and like, whatever, I'll stop my grocery.
or a hot dog or something.
Yeah,
Absolutely.
exactly. So like higher gas prices might like drive like for
In-store sales. I think maybe they said tickets, but I don't know if that's what they meant. Yeah. Good point. Yeah, absolutely. So the two kind of conflicting things with gas is higher gas prices mean people might not want to drive as much, but summer coming up might mean people drive more. And so I don't know where those two things line up, right? Which one, like, is there going to be overall more traffic or less traffic? And I don't expect, I mean, I think inflation is going to still be here for a little while, even though the Fed's trying to fix that, but I don't know if gas prices are going to come down at all. I don't think they have.
So Costco has consistently outperformed the market in times of crisis. So if you look right here, this is the 2008 housing crisis right here, and orange is the S&P 500. So you can see it took a pretty significant dump compared to Costco, which, you know, still took a little dump, but definitely not as significantly. And then if we look at this graph, orange is the S&P 500 and black is Costco. Or yeah, that's Costco. This is COVID right here. And as you can see, the S&P 500 took a pretty fat dump and Costco didn't drop as significantly. I'm not sure what happened right here, but that looks, that might have been Costco. Looks like March of 2020.
That would have been.
That would have been COVID?
Yeah. What's that big drop of there? What stayed there?
This is, wait. Yeah, this is March of 2019, maybe.
Market tank in March of 2019.
I might be reading this wrong. This might be March of 2020.
So
See,
18,
19 March.
So that would have been March of 2020 is that big drop right there.
Okay,
and
so
then
this
that
is
one where
March of
Costco fell was in
2021.
March of 2021.
Okay.
So March of 2021, Costco fell on its own. And March of 2021 would have been around when they reported earnings. So they report earnings in March. Well, they report their annualized earnings in October because their year ends in August, but they would report a quarterly in March. But then they have another one coming up in June, I think. May 26th. Okay, then maybe they didn't report in March. I don't know.
Yeah, I'm not sure what happened there. Maybe they,
Yeah,
that'd be interesting.
but then, that was Costco fell. Well, the market did. And so if it was a big COVID thing, that affects everyone.
oh yeah.
The Ever Given?
Yeah.
But that would have been coming from the Middle East.
Yeah, so Costco is super unique. They're able to charge a membership fee and sell items in bulk at relatively cheap prices. And stores like Kroger, Albertsons, and Walmart, they don't operate on the same business models, and you are able to get those same cheap prices there for bulk items. People flock to Costco in a crisis. This picture is from COVID at some point, and you can see the lines are just pretty crazy. So yeah, it's times of crisis. People still seem to hold on to their Costco memberships and continue to buy from there. And they have a decent exposure to overseas markets. 20%, 27% of Costco sales are overseas, and I think something like 12% of their stores are located in Canada. They also have stores in Mexico, and I mean, a less significant amount of stores worldwide. So,
yeah, I think with the Fed increasing interest rates, we're probably going to look at the economy not doing awesome next year, which Costco being a defensive stock might be good for them.
Yeah, I was reading in the thread that Costco is also looking to continue to expand outside of the U.S. So opening new locations. I'm not exactly sure where, but outside of the U.S. And, yeah, that's all I got for you.
Did you ever find anything for the factor analysis?
Nothing significant enough to report on. I think the RLY had the lowest p-value that, so that would be related to CPI. But other than that, nothing that was significant statistically.
Cool. Okay, so our plan then, I guess, is, I mean, we did a little bit of detail on that. I'd say for the fall, I'm just trying to finish up this right now. So for the fall, I think we might look at, I'll come up with some reporting figures that we can like have a report system so that every so often, I'll figure out the timing too for the fall semester. I'm going to treat it kind of like a class. So we'll have like set due dates for, okay, we need to report on this company or on this industry or somebody from this industry or something by this date. And then we'll kind of split it up in groups. So for those of you who are going to be here next semester, please come back and invite your friends because we need kind of a bigger group. And then I talked to a hedge fund manager guy today on LinkedIn. So he's going to come talk to us next semester too. Actually, he's not a fund manager anymore. Now he's retired, but he was for 25 years. So then he runs a private, like a family office kind of thing in Texas now. So we'll see about that. And then what's the other news? I got a couple potential fundraising options to get our portfolio going too. So we'll hopefully have some more money to manage in the fall. I'm pretty confident we'll have more than 25,000, but we got like, I can't really say that until the check's actually in the bank. So that's where we are. Any questions? The current like balance of our brokerage account is 25,000 cash because it's not open yet. Like I'm still waiting for the university to open it. We don't have any, like, no, it's just $25,000 cash sitting in an account. So we'll actually place the first trade next semester because there's no way the university is going to get around to it. But we have, so the way that it works, we have a university foundation board. They're responsible for the money of the university, and they have to vote on allowing us to do this. But they only meet 4 times a year. So their next meeting is during the summer, and so I have this whole report that I worked on with the accounting people, so it's ready. But when they get to their meeting, they'll vote, and we know who they all are, so we know that they vote yes. But we have to actually go through the process. So then once they do that, then the brokerage account will get opened with the asset management group, the brokerage firm, the company that we're using, and then we'll actually place the trade. So we'll start with IVV because that's what we talked about before, and then we'll take funds from the IVV, which is the S&P 500. We'll take funds from that to buy other things, so that we're always tracking the S&P, but then trying to beat it. And then that'll be part of our portfolio group. So I'll send out some like campus announcements too to say, hey, we're open for people in the fall. But if you all know friends or people in other classes who want to be involved, let them know. We'll try to get, like, if we had 30 people in this group, I think that'd be solid. What other things can we talk about or plan for? All right, we could be done early. I don't have a ton extra to show yet. I think that's probably what we'll call it from there then.
What's the PE ratio?
Because they're so expensive. Like their price went up way higher than Walmart. They're outperforming their competitors. Yeah, and so because they're seen more defensively, I guess Costco being more defensive than Walmart or Target, maybe. I think probably more than Target for sure. Walmart still seems like the cheap, option, but Target feels to me from like a consumer perspective, Target's like the higher end of the those kind of retailers. But Costco's seen as the one where people go when the economy is not doing great, and the economy hasn't been doing great, so it's just outperformed. But they haven't necessarily increased their sales enough to justify that outperformance. Good question. So also in that DCF model, if I go back here and we look at this valuation piece, like this is EV, but I could do where's the other one? Oh, so so PE ratio does, value them based on a PE ratio, and they look good, value them based on their book value, their sales, cash flows, right? They don't look as good. So depending on how we structure this, actually perpetual growth looks terrible, 75% down. But depending on how we structure them, we might say we want to look at something, a different valuation factor than another one. So we'll go more in detail on that next semester, I think. Cool. All that good. I'm gonna stop the recording. I'll post this on Discord today.